So, by now you've probably heard about the antitrust suit against Google. Does this make the Alphabet, GOOG stock a sell or a hold? What do analysts say? Could it be a buy? Well, I'll get to that in a moment, but first let's just talk a little about the lawsuit and what it all means. For the antitrust allegations against Google, there are three main investigations to be resolved. 1. The Department of Justice, DOJ, and multiple state attorney generals have charged that Google has engaged in anti-competitive practices to maintain its dominance in search and search advertising, by paying billions to be the default search engine on mobile devices and web browsers, by favoring its own services in search results, and by having anti-competitive contracts which prevent competitors from accessing search data and using Google's advertising tools. On September 12, 2023, the trial began in the U.S. District Court for the District of Columbia. On November 16, 2023, both sides rested their cases and Judge Amit Mehta is awaiting post-trial briefs before issuing a ruling. The ruling is expected to come down in 6 to 12 months. During the trial, it was actually revealed that Google was paying others to use Google as their default search engine, spending a whopping $26.3 billion in 2021. $18 billion going to Apple alone. The second allegation is regarding Digital Advertising Technologies, DOJ. It has been said Google has monopolized key digital advertising technologies, collectively known as the ad tech stack, which website publishers and advertisers rely on. By favoring its own ad exchange and demand-side platform over competitors, restricting access to user data needed for effective ad targeting, and by acquiring rival ad tech companies to eliminate competition. This lawsuit was filed on January 24, 2023, in the Eastern District of Virginia, and on November 21, 2023, Judge Leonie Brinkema rejected Google's motion to dismiss, allowing the case to proceed. And finally, the third set of allegations comes from the European Commission. Google is said to have abused its dominant market position in various areas, including Google Shopping favoring its own shopping results over those of competitors. Recently, on October 20, 2023, Google was fined €1.5 billion for anti-competitive practices in the online advertising market, and on November 14, 2023, Google was fined €2.42 billion for favoring its own shopping results in search. And there are ongoing investigations regarding Google abusing its dominant position. The European Commission is investigating Google's practices in other areas, such as Android, where it says that Google required phone manufacturers to pre-install Google apps and services on Android devices, and AdSense, where it restricted how publishers can display ads on their websites. Overall, Google faces significant antitrust challenges around the world. The outcomes of these cases could reshape the digital advertising landscape and potentially lead to significant changes in Google's business practices. So does that mean that Google shouldn't be a stock to invest in? We'll get to that, but, as promised, here are what two analysts have said recently. First of all, we have Jim Cramer of Mad Money on MSNBC. On November 13, he said not to buy the stock, saying, "They pivoted to cloud and did well for 1.5 years. Then pivoted to NFL football and are losing money in it. Then pivoted to AI but need to invest more in it. All told, it's a cheap stock that needs to stay focused on YouTube to be worth a lot more." And on the 20th he said, they need to get their cloud platform back on track. Any growth here will push shares up. Also, would be nice if GOOG quantified their NFL advertising and how it could expand sports on YouTube. So is this valid? Well, YouTube is worth 9% of the Google Services division of the company, which generated Alphabet $86.57 billion for Q3. Its other two segments are Google Cloud and what is classified as Other Bets. Other Bets are basically experimental services or services that don't earn them any profit right now. And in Q3 of 2023, Google Cloud didn't earn them any profit either, basically losing $5.14 billion. Which leaves them with Google Services as the one that is earning them profits. Google Services include Google Ads, Android, Chrome, Hardware, Google Maps, Google Play, Search, and YouTube. However, YouTube is only worth 9% of Google services, and the NFL deal is not the only thing on YouTube. So, any misstep in this area would not have a major impact on the stock. For Alphabet, search is still king, and it is where the company generates most of its profit. As for AI, they are well invested at the moment. We also have Brett Gerard, CFO and Portfolio Manager at Liberty International Investment Management. He rated it a hold. On November 19, he commented about the impact of an antitrust decision. We've seen these antitrust cases before. At some point, perhaps the government will be successful, but we haven't seen it yet. North of 90% of searches run through Google. Any deterioration in this would take a long time. Good for the long term. Its AI search seems to be neck and neck with the one from Microsoft. This seems to be a more valid analysis. And, with cash on hand, Google should be able to weather any storm. The company had $119.93 billion in cash and cash equivalents as of September 30, 2023. As well, with Google's investment in AI, namely the acquisition of DeepMind in 2014, its investment in Lambda, Palm, Hugging Face, and the $2 billion investment in Anthropic on October 23. As well as having its own Google Bard, we may start to see a contribution directly by AI to its bottom line, as well as an even better search capability in the future. Apart from these two analysts, most are rating Google a long-term buy. As reported by CNN Business, the current consensus among 56 polled investment analysts is to buy stock in Alphabet Inc. This rating has held steady since November, when it was unchanged from a buy rating. In particular, currently in December, 41 have a buy rating, 5 have an outperform rating, and 10 say to hold. The median estimate for the 48 who gave a 12-month price forecast was a target of $153.50. Keep in mind that Alphabet, GOOG, stock closed Friday, December 1, 2023 at $133.32. And here are some interesting numbers about Alphabet. Google commands a dominant position in the online advertising market, with a global market share of over 30%. Google holds a dominant market share in search, with over 90% usage worldwide. This attracts more users and advertisers, creating a self-reinforcing loop that widens Google's lead. The Android operating system powers over 70% of smartphones globally. This large user base gives Google valuable data and control over mobile internet access, further strengthening its network effects. And some recent positive financials. Google's current price-to-earnings ratio of 22.6 is below its 5-year average of 26.2. This suggests that Google's stock is currently undervalued relative to its historical performance. Google's price-to-sales ratio of 4.4 is also below its 5-year average of 5.1. This further suggests that Google's stock is undervalued relative to its sales growth. As well, Q3 2023 revenue was $74.6 billion, exceeding analyst expectations by 5.8%. Its Q3 2023 earnings per share was $1.44, exceeding analysts' expectations by 11.5%. It had 93% year-over-year revenue growth in Google Cloud, demonstrating strong growth in this high-potential segment. And there was a 40% operating margin. Alphabet maintained a strong level of profitability. So to summarize, it seems like a lot of analysts are recommending to buy the tech stock, but there seems to be some hurdles that Alphabet/Google will have to overcome first. As an investor, investing for the short term would not seem to be the best choice. Waiting to see what happens and what implications there are in regards to the antitrust lawsuits would seem to be the most prudent thing to do. If an investor had stock, holding is probably the right decision. I do think over the long term, it will continue to perform, along with the other Magnificent Seven mega cap stocks, which also includes Apple, Amazon, Microsoft, Meta, Tesla, and Nvidia. These 7 stocks are responsible for over 70% of the S&P 500's 2023 gain, and from 2013 to 2019, the Magnificent 7 stocks grew at a compound annual growth rate of 15% compared to a 2% growth rate from the rest of the S&P 500. Unless something drastically changes, these tech stocks are poised for gains in the future. As always, add this information to what you know, do your own research, discuss with an advisor, and come to your own informed decision. Thanks for watching. Like and subscribe if you watched to the end and came out better informed.